Hi folks, this is Sean Hyman from The Logical Investor, and I am re-recording this video because it got screwed up the first time around. Thanks for Fusion Dude for pointing that out. This one will not have all of my allergies and stuff like that on it like the last one did, or at least not as much of it. So I do these in one take, and so who knows if I can replicate it exactly like I did the first video, but I will try to go back, look at what I originally wrote to make sure I replicate it as accurately as possible. So for starters, before I get started, I want to say that of course, all the content is switched over to the new site. The beta testing is in the works. So far, we haven't found anything major. I will make a few more videos, like getting started video, how to subscribe, stuff like that. Put that on there, and then we will be ready to go. So unless we run into anything major in beta testing, we may be, getting pretty close to the switchover point. We're not there yet, so don't jump the gun. You'll still be able to go to SeanHyman.com and see the new site, which the new site will look something like this. I know all that's not in your complete screen there, but you'll be able to see content in this area. I've got just a few basic areas. Investing basics is all of the stuff that's in the Ask Sean section right now. It's the timeless stuff. So the teachings on fundamental analysis, technical analysis, sentiment, Elliott waves, etc., that type of stuff. The timeless stuff is in investing basics. Then the blog is timely stuff that might be about current events and different things like that I write about. Ask Sean is where you can ask me questions. The store will be where any of you, if you want to, can buy my book, The 6 Keys to Financial Success and Options Trading Demystified. And then here is, right here it says members area, but before it says members area for when you're subscribing, again, when we're ready, because we're not ready yet, you'll click the subscribe button, sign up, and then it will make this area appear that says members area. And you click on that, and that's where the weekly videos and monthly newsletters will be. So we're getting there. So that's a little sneak peek there. So so I was looking at the dollar recently, and it's broken this recent rally upward, and so far anyway, it's put in a lower high. So if this goes down and puts in a lower low than this low right here, we will have a lower high, lower low, and that will be a major negative for the US dollar. Also, we've got declining RSI, declining MACD, which is getting even more steep to the downside lately. So another sign that there could be a breakdown happening, more selling going on. So, I'm looking for this to potentially do something like this. If that happens, then that will even turbocharge our returns. Now, we are not dependent upon a declining dollar for our stuff to prosper. I mean, our current portfolio and things that we've sold already were in a time with an increasing dollar. So that's proof positive right there that we don't need that. So our system is still our system. It's not just an anti-dollar system. It's our system. So in other words, if we find fundamentally solid companies, fundamentally cheap, find them when they're hated, average down, use our technicals and sentiment, etc., then we prosper over time, whether the dollar's going up or dollar's going down. But when the dollar does go down, we can really get the wind to our back more, and it really helped turbocharge our returns. So that's why I look at the U.S. dollar ETF and also the U.S. dollar index. So we could be at a turning point here. Again, too early to say for sure, but could be. And so if so, that will be good for a number of our positions, particularly metals. And let me show you a long-term chart of the S&P 500. Of course, we are still very extended, far away from this 200-week moving average. And this, we don't know yet, but this could be the beginning of the next sell-off. Again, it's too early to say for sure. But what do we know? We do know that the risks are high because of how far the price is away from the moving average. We do know that the RSI is still slumping on the weekly chart, which is a big heads up. So is the MACD, and that gap there is huge. So so each time that happens, this gap is widened. There is high risk of downside. Even earlier on in the trend, when that happens, you usually will get some downside to the moving average. Again, this is kind of mid-trend. When it's away from the moving average and it comes back down to it, then you got, as it gets further along in the trend, a lot of times it's getting further away from the average because the crowd is getting more bullish. They're getting more confidence in it because of what they've seen in the past. So they're thinking they can't lose and they don't want to be left behind and so forth. So it just bids it up even more as the bullishness increases. And so as it gets far away from there, like it is here and here, and sometimes it just comes back a good bit and even gets even more extended before you really have the big one. But again, you see the swift risk here, and then it comes back up, and here we are at it again. So sooner or later, we see this come back down to the 200-week moving average, and if we are at the end of the trend, which I think towards the end of this bull run, then it not only stops there, but it eventually goes way lower, and it may have some kind of action that looks something like this, to where it either cuts through it and uses that average as resistance and then goes lower, or it could bounce off the average and bounce up a bit but have a weaker high here than here and go lower there. That would be the most likely scenarios. Doesn't have to be those scenarios, but those are the most likely. And then on the daily chart, we have got some negatives as well. So what I'm seeing there is a break of this trend line here. Now keep in mind, this is not the main trend line, but it is the latest leg of the uptrend, and that's been broken. We do have declining RSI. We do have somewhat declining MACD. So, a lot of weakness there, and the price here is still a decent amount away, even from the 200-day moving average, but of course even further from the 200-week moving average, which is even more important. So, so a bunch of negatives there for the overall market. So what is that great for? Well, it's great for metals like gold, silver, and platinum. So we're positioned well for that. It's also bad news for the dollar, because as money exits out of the S&P 500, Dow, NASDAQ, etc., it will tend to go to other places in the world, Europe, emerging markets, etc. And as that happens, dollars are sold, and money goes into those foreign currencies and into the foreign stocks. So that's why I've said all along that the stock market decline could lead to a dollar decline. So with gold, something that I like here is that, of course, we've got an obvious uptrend where you've got your higher highs and higher lows. This was a massively higher high here than here. Disregard that one. And we went to a low here. So far, it's planed out. So we are probably in the next move higher here. Can it go and do something like that? Sure. Anything like that's possible. Or can it consolidate a bit before it does that? Sure, any of that's possible. But these are the likely scenarios that we're likely to see. I doubt this one happens, and the reason is because there's an increasing RSI. The MACD buy signal is here, and then as equally as important, you've got selling volume that keeps stair-stepping downward, and so the sellers are drying up, and that makes it easier for the buyers to take back control there as well. So very bullish on gold. I think it's firming up and getting ready for its next leg higher. And then next we've got, let me type that right, FXB. FXB is leading the way amongst foreign currencies. It's leading the way higher, even stronger than the euro and Canadian dollar, etc., which they will be firming up as well, but this is leading the pack higher. We've got the latest leg down that it completed here. it hopped above that, above its 50-day moving average. Now it's an increasing 50-day. Got a golden cross here with a 50 over the 200. So those are all bullish signs. You've got an obvious uptrend as well. Strengthening RSI, strengthening MACD here. So all good technical signs. Buying pressure is accelerating. So, pretty much everything you'd want to see here. It was nice also that it came above here and consolidated above this 200-day moving average, and it broke above that recently and started the next leg higher. So, eventually, of course, we will have some pullback before heading higher, or we might go higher and then, pull back after that and head higher. But either way, these are the type of scenarios that I'm looking to see happen. Now, can you have something that happens deeper? Sure, you can. I don't think that's as likely with all these other strong technicals, but these other two likely scenarios, I think, or these two scenarios are more likely than this one, in other words. But any rate, the trend is still up and looking good. So if you got in on the 118 averaging down, which it went down into the 116s for about a month, or a couple of times within about a month, so you had opportunities there. If you did that, then you're already up, 3-4% on your position. If not, you're getting back closer to break even on the position and will be shortly profitable probably. But you're already profitable in a shorter time frame if you were on your toes and paying attention and averaged down, or had limit orders and got that averaging down there. So, the power of averaging down. Then we've got, this is not, hang on a second. EWW is looking very bullish. Again, as the dollar tips over, that will really help the foreign markets. And so EWW being one of the beneficiaries there. But it can even go up even before that. But I do think that's one thing that's hindered this from going above the 45, 46s. I'm looking for this to head out to new highs, and once it does break this range right in here and breaks above that, I think it'll see its next round of real momentum higher. So in the meantime, I believe we're on our next leg up higher, but could we, have some type of pullback before that? Absolutely. We are oversold on the RSI, which is nice. The MACD is distinctly heading higher, which is nice. The selling volume has dropped, big time. So selling volume's drying up a lot. So I'm very bullish on that. So loving what I'm seeing with EWW, very bullish on it. Next is LPL. So this one, while I'm thinking about it, there's a reason why I don't suggest many brokers, and I really stick with like Schwab and Ameritrade, which are likely joining together if regulators approve and all that happens. I worked for Schwab for many years and for several years, and I'm currently with Ameritrade as my broker as well. Both are great, reputable firms. Love them both. But there's a reason why I don't suggest Fidelity, Merrill, E-Trade, others. There's a lot of these firms that they really, some of them won't allow some of the foreign purchases that we make, even though they're ADRs on U.S. exchanges. Some of them will charge extra fees, which I believe are unnecessary. Some of them don't know how to handle them, really, just period. So in my opinion, that's why I don't suggest going with any of those. So this week, there was somebody who had an account with another firm, and they dinged them with a couple $100 fee, and they said it was because they had to go out and buy it on a foreign exchange. Well, they didn't have to buy that on a foreign exchange. If you'll notice on the chart, it shows that trades on the NYSE. So it's a foreign company. It's ADR and trade on the NYSE. So ADR just stands for American Depository Receipt. So LPL, is easily tradable in U.S. accounts in U.S. dollars on the NYSE, and any broker should know that, in my opinion. But nonetheless, I think sometimes if you try to ding people, or either they make the wrong move, like if they were dumb enough to go buy this on a foreign exchange in foreign currency, that was their bad, when there's an ADR where they could trade it in US dollars rather than the NYSE, and it's, in my opinion, better for the client. So anyway, enough of that said. So LPL had this ABC downtrend here that it had on its daily chart, broke that, so it started its next leg up. Broke above this major downtrend line here and broke above its 50-day moving average, which is now rising. So now we've got, higher lows happening, and we're about to have more higher highs, I believe, once this consolidation happens or gets through. So this is likely a 5-wave sideways consolidation pattern, and once it breaks above these highs here, it should be more off to the races for this stock. But, can it go down some more? Does it even have to hold this pattern? Can it go down lower and all? Sure, it can. So the next run up should be around the 200-day moving average, roughly. Could be a little above it, could be at it, could be a little below it. Usually gets rejected the first time, but, so I'm looking for something like this to happen and then take it on up. Or sometimes a consolidation near enough to the average can break above it and then kind of retest it first before it goes back into the upward move. But anyway, you get the point. I'm looking for this to head notably higher, with the next major leg being upward. And the RSI is stronger. The selling volume continues to decrease, like you see here. So that's all good signs. You've got the MACD heading higher. Like I said earlier, RSI heading higher. So I'm looking for this to have its next major leg up over the coming months to year. And so I believe we will be very pleased with that. We've got BBBY. This one, some of you, of course, are already out because you've had your averaging downs in that were profitable enough that when this move happened, you were able to exit and get out then, and that's awesome. And I encourage that exit out, because things like this are possible before going back into the next up move. And by locking in your profits here, for those who were at the points that they got in and averaged down at, that was profitable for them to do, they got out in a much shorter time frame and a very nice profit. For those who didn't have as favorable averagings, then they rode through this, and then now we're seeing this next up move. Okay, so while I'm on this chart, it's a good example of price and value do not equal each other. This company did not change so much that it went from 10 to almost 20 within a few months, and then the few months after that go from 19 to 7, and then the few months after that go from 7 to almost 15. So the value of the actual underlying company did not change that swiftly, yet price did. So price is always not representative of value. See, efficient market theory believes that you're always at the proper value for any company. If that were the case, you could never beat the market. Nobody could do anything like what Warren Buffett does. Price overshoots value and it undershoots value. And why does that happen? That happens because human emotion is involved. People get overly greedy and overly optimistic, and that shoots something way past what it should be worth to the upside. People get overly fearful, overly negative, and that shoots the price of something way below what it should be valued at. And so that's why there is price discrepancy from value, because of the human emotion that misjudges things, greed up here and fear down here. So don't confuse price with value. So the people that get enamored with the stock when it runs up here and then get depressed with the stock when it does this right here are the ones that are fixated on price and confusing price with value, and they're looking at the company like it's just a stock rather than it being an actual company. So when you're looking at it like a company, which is what Warren Buffett teaches, you're mindful of its fundamentals, its earnings, its cash, its profit margins, its debt, etc., all that kind of stuff. When you're looking at it like a stock, then when this is happening, you say, oh, that's a good stock. And when this is happening, you say, oh, that's a bad stock. And it's the same stock within just a handful of months of each other. So it's not, what makes it a good stock is it has to be a good company first, and it has to be a solid company that's a value. And then that's what makes it good for us, buying it when it's hated and average down, thereafter. So here we are on the next up leg after this ABC downward move. So that opened up for the next leg higher, which we are in right now. Now this has gone from 720 to 1499 thus far within just a few short months. So this could consolidate a bit before, kind of catching its breath before going higher. It could, have a decent sized pullback before going higher. Like any of this stuff could happen and would be normal. It would not surprise me if we just consolidate a bit and go higher, because we've got a golden cross here that will likely act as support as it did right here. But if this goes back deeper, all that's doing is there's some profit taking from traders who traded it in this move, and they'll take some profits and it causes it to pull back some, and then the uptrend can resume. But you've got about every bullish signal out there right now. You've got a rising RSI, you got the golden cross, you got higher highs and higher lows, you got this latest down leg broken, you got massive buying spikes, your selling volume continues to get lower, you've got the MACD heading higher here. So I mean, it's like, what more would you want? So any sell-offs will likely be pretty muted and relative to upside. And I would hate to be a short seller right now of a chart that looked this good. So, and that's one thing that makes these move so radically, because Bed Bath & Beyond is one of your more shorted stocks in the market. So when they have to cover their position, either because they get scared or they get margin called or whatever the case, a sell short is covered by a buy order. That's how you exit and close that out. So that causes buying pressure. And then also just people who are getting bullish on it that want to get into it and they buy and going long, that's buying pressure. So sometimes you can have double the buying pressure that really causes these short squeezes that cause these to go from 10 to almost 20 in a few months, and from 7 to almost 15 in a few months. So it can have some pretty big moves. The shorts almost act like a lot of fuel to the fire, and there's still quite a bit of shorts out there. So I have no problem believing that this can easily go and take out the old highs and head to new highs, go 20, 21, 22. And so that's what we're looking for, to be able to exit that for the remaining of those who still own it. So it's gone low enough where you've gotten all of your averagings in. So now as it heads higher, you'll be nicely profitable in that. And some of you, again, have been profitable in it once or twice even. So it's really been good for several already, and it'll be very good for everybody, shortly, probably coming months or so, months to year. So then we've got CAJ after that. This one has been moving nicely. Here's what I'm seeing lately. You've got, of course, rising RSI has been a telltale sign of strength coming. You've got the selling volume has continued to decline, as you see here. The MACD has continued to strengthen. So all kinds of bullish signs here. So this has gone from 20 25.49 to 28.28 in just a few short months. So this could have a pullback because of this run up here, and also there's like a kind of a somewhat of a triangular pattern, if you will, right here. It's not super clean, but sometimes those can cause, another pullback before heading higher. So just know that's possible. Or with the consolidation that's done below, the 200-day moving average might have been enough. If it was, then it can go up and consolidate a bit and then take off, or just take off from here and continue on higher from there. So either way, you can see the direction of any of these paths are on the up and up. We completed this ABC downward move here. When that was completed and broken, that moved, made way for the next up leg. And here's a wave 1 in it, here's a wave 2 in it, we're in a wave 3 in it. So we'll have a 4 at some point, which will either make it sideways or have a pullback at some point, and then a 5th that'll take it on up, likely to new 52-week highs. So again, very bullish on what I'm seeing there, and just thrilled with it. So then we've got KHC, which is next. This one is playing out true to form, just like we thought, and a lot of the technicals gave the hints at what was to come. When you had the RSI was steadily strengthening, the MACD has been giving clues for even longer, as it has been strengthening for longer. You had such a massive selling spike here that likely started the bottoming phase. Notice I said phase and not the exact bottom. Selling volume has been just absolutely drying up. So this is likely your ultimate bottom here. Right now you've got higher low. This low is higher than this low. And you've got a higher high in that this high over in here is higher than these highs here. So now we're doing another higher low. The next higher high could take it on up a good bit. Could we go sideways and then up? Sure. Could we pull back a good bit and then up? Yep. Could we go back even a little deeper? I doubt it, but could, and then up. But these are the type scenarios that I'm looking to see happen. So this is if so, once we get the next higher highs, it just further confirms that we're in the early stages of that next uptrend heading higher. And sooner or later, it brings in the momentum crowd, which pushes our position even higher. So love that. So again, I think 3G was dumb in selling, and we were smart by holding. But again, when you look at it like a company and not like a stock, that stuff stands out to you a lot more. So ticker symbol ENI. You've got your latest ABC down leg here. It broke this C leg here, and that opened up the next leg higher. So with some higher highs and higher lows. It has been consolidating around this 200-day moving average area. In the near term, whatever happens with OPEC could sway our oil stocks either way. They're meeting now. They normally come out with a communication at the end of today's meetings. They did not do that. Of course, there's a new guy in charge now, so all that could be out the window. We don't know. There was some disagreements. Iran left, and then they came back to the meetings, and so I'm sure there's some heated meetings. They need to lower production. Obviously, Saudi Arabia wants to do that. Some others, and there's some others that don't. So they grapple back and forth, and we'll see what happens. If they lower oil production, that would help firm up oil, which they need to meet their budgets. They need it to have a better shot with Saudi Aramco having a more profitable IPO in future as the stock goes up, because it's going to need higher oil to do that. So there's a lot of reasons why they need oil higher. So in their own interest, they need to cut production to get oil price higher. So ultimately, that will be good for our our stocks as well. Long term, whether OPEC cuts or not, we bought companies that were fundamentally sound, fundamentally cheap, and we got the power of averaging down as well. So we're going to be fine either way, whether they come out of these meetings and cut or not. If they cut, that could give more near-term upside to our stocks. If they don't, we could get more of something like that, and that's fine. Doesn't matter. I like the RSI firming up. I like the selling volume, at least for now, being a little less. Now, if OPEC came out with some kind of bad news, of course, you could, have that selling, spike back up a little bit and draw this out a little bit longer. But so far, the technicals are firming up, looking good. So over time, this is going to higher highs. It's just a matter of OPEC affects it and delays it, or if it goes there a little bit more immediately. So I'm looking for that to have a nice push higher. And again, very bullish on ticker symbol E. Then we've got SLV, which I could pretty much say ditto to all the metals after we discussed my thoughts on gold and the charts there. You've got the higher highs, the higher lows, the massively higher high here. And how do you get that? Because a heck of a lot more buying took place. But then when all this was happening, I said, hey, the price is getting very far away from the 200-day moving average. So expect, some pullback. And that did happen. It's hard to see. This is sloppy choppy, so it's kind of hard to say what is exactly the ABC. I would do it like this, but it could be argued that it's otherwise. So far anyway, we've got higher lows here than here. So we could be gearing up for the next, push higher. If not, if it goes down a little and then higher, or if it, retreats back a good bit and then higher, it really doesn't matter. The trend is upward. Here's your higher high, higher low, higher high, higher low. We're on our way to higher highs. The RSI is strengthening again, which is good. You've got your MACD and a buy signal, and your selling continues to dry up. So these volume charts tell us a lot about what's happening. And so with the selling drying up, it makes it to where the buyers can take back control for the next move higher. So again, I'm just very bullish on what's going on with SLV. And then we've got CHL next. So CHL did not double bottom. We suspected that it could because, but I did say it was too early to tell just yet. It did break below that, so it could make a run at our third averaging down point, which is $2 or $3 below these levels right in here. So if you don't have limit orders in, you should probably put them in. That way, if you're not looking at it and it just spikes down and then back up, you got a shot at getting in. What I do like is the sell spikes, do continue to get quite a bit lower. Your MACD is higher, your RSI is higher. So this should be bottoming fairly soon. Whether that does a little something like this and then comes up, or whether we've already seen the bottom and we start coming up from here, we should challenge the 200-day moving average next, likely get rejected from it a time or two, and then ultimately, be able to come on up. So loving what I'm seeing there, and hopefully we get to snag that third averaging on it. Then we've got PPLT. So again, same thing I could say for the other metals, looking just as good. The metals are broadly heading higher, which again will ultimately be a weight on the dollar. And it's also a bad sign for the broad, stock market indexes as well, when you've got metals broadly rallying. So, so here's your higher highs and higher lows, and we've already had our latest lows, I believe, that are likely in place. And once this is broken to the upside, we'll have confirmation of that. But so far, the lows are holding higher than here. And so if so, we could see this head on up, pretty quickly. Could it come down a bit before that happens? Sure, it could, but anything like that's possible. RSI is firming up. MACD is firming up a little bit. Selling volume is very notably drying up, where you see that here. So that's a good sign. And of course, MACD's been firming up for a while. So all good signs there. Moving average trending higher, higher highs and higher lows. Technical indicators like RSI, MACD firming up, and selling volume dissipating quite a bit. So again, I believe we are on the cusp of the next leg higher for the metals. XOP. This one is one that we will know more that it's broken higher once you see like things like this be broken above. So far, it's still kind of trying to hold kind of a region of, around in here. I mean, this is all close enough for government work to say that's, might be a bottoming period. We don't know for sure just yet. Doesn't matter to us either way because we've got in two positions. If it goes lower, we have the chance to snag our third and head on up. If it bottoms here and we've got in our two positions and it goes up from here, we're fine with that too. So doesn't matter to us. Selling is getting a little less negative here recently. The MACD is getting slightly more positive and is right at the cusp of another buy signal. RSI mildly positive as well. So we could be getting close to that turnaround there. Again, OPEC will affect it in the near term, but ultimately this ETF has a cheap average PE. It's diverse, and those PEs won't stay cheap forever. So so I'm looking for something like that to happen, where we come up and challenge the 200-day moving average, probably get rejected from it, and then bust above it. So and then of course it could go, quite a bit above it. But loving what I'm seeing there. Very bullish on it. Glad we're in it when we are, and bought it near historic and decade lows and even multi-decade lows. So loving that. SLX was was one that you wouldn't normally say that logically it would be the time to be in steel stocks with a global economy slowing, but sometimes investors overshoot something to the downside and they get overly negative, meaning they overly punish what should have been the scenario. So what we do see is that there's an A, B, C downtrend that's already ended. So the next uptrend has started, and we've seen that as this big short covering rally, wave one, unfolded here. It broke above the moving averages, caused a golden cross, pushed from 1389 to 4887. That's massive in like a year and a half off those lows. That short covering rally, wave one. Then we've got three wave two, which we don't know for sure is over yet. It might be. This could be the bottom for that. If so, that opens up to head higher. We know that is done once this upward channel breaks there. Then we know that that's the bottom. Otherwise, we could have one more leg lower before it heads higher. If so, that allows us to snag an averaging down, so that's fine. What I do like about it is the increasing MACD. We were oversold on the RSI. Got a rising 200-week moving average, which is nice, and then of course selling volume continues to dissipate. So that's a good sign as well. On the daily chart, here was your latest ABC down leg here, and so that's been broken. Well, actually, I would draw that a little differently. I'd probably draw it like that. Anyway, it's broken it there, and so that opened it up for its next leg higher. So here's your higher, your high, your higher low, slightly higher high than here. We are getting somewhat of a, now this is a truer rising, rising wedge. This many times is sometimes how a wave one will unfold. These patterns are rare for wave ones, but they can happen. And so in those cases, a lot of times you'll have something happen, like this, or even sometimes a little deeper like that. So if that is that pattern and that wave, then we would probably see something like that happen. If this is wave one, wave two, wave three, going into 4 and 5, then we could consolidate and head on up. Anything like that could happen. The nice thing is it doesn't matter which of these scenarios play out, because I believe we are on the next leg higher. With this ABC, that C leg being broken is a big clue. Your persistently strong RSI, your persistently strong MACD, the selling volume getting notably lower. You see that getting lower here as I'm emphasizing it here on the chart. That's all a good sign. Your buy spikes are picking up. So really, we just got in a really good time. We may or may not get our averagings in. We'll see. If we get this pullback like this, if it goes deep enough, then it's possible. But early on, we got in, pretty good in the 34s, with it being at 37s now. So anyway, I'm looking for this to head higher, and we can do quite well on this one without this even going to new 52-week highs. So we're positioned very well in it. Let me go back to what I wrote from the first time I did the video and make sure I covered everything. So we talked about OPEC, gave a sneak peek of the new site. Well, I suggest only a couple of brokers. We covered that. Why I'm bullish on the metals. Our currency pick leading the way, U.S. dollar. Yeah, we covered all that. We talked about why we aren't dependent upon a declining dollar. Price and value. Well, it looks like I did pretty good. I'm surprised I did that almost exactly the same, because I'm kind of a one-hit guy, one-take guy. So I click play, record, and record it and produce it, and that's it. I don't edit them or whatever. And so, yep, we covered everything like we needed to. All right, that's good to go. So, be patient. We are, when we do make the switch over to the new site, there will be bugs. There will be stuff that's a little bit different. But overall, I think we're moving into a great era. And I think we'll be very pleased. And it can be our final spot to finally be, and which I will be thrilled with, because I hate changing stuff. So I like consistency. So anyway, that's it for this week. Thanks so much, and have a Merry Christmas. I know I'll be talking to you before then, and God bless. Bye-bye.